This company drives the science behind products we smell and taste. Have investors caught the scent of a winner? Or does IFF need to do more to stimulate the market senses?
When a company reports seemingly subpar numbers, you expect the stock to get hammered, especially if it's already run up ahead of the earnings. That's exactly what happened to IFF, International Flavors and Fragrances for you home gamers. This company, which creates proprietary scents and tastes for all sorts of consumer packaged goods, reported after the close today, and the stock got battered in after-hours trading. I can see why at first glance. It doesn't look perfect. IFF delivered an 8-cent earnings miss off a $1.30 basis, slightly weaker than expected sales, in part because Frutarom, new acquisition, the competitor they acquired last year, was softer than anticipated, but I think we have to drill down on that, too. On top of that, the full-year forecast seemed a tad light. All right, so I'm a little confused. IFF has been a very well-run company, 130 years old, something I've been recommending since I was at Goldman in 1985. So I got to figure out what's going on here before I just say, let's buy it. So let's take a closer look with Andreas Fippig. He's the chairman and CEO of International Flavors and Fragrances to learn more about the quarter and where the company's headed. Mr. Fippig, welcome back to Mad Money. Andreas, have a seat. Good to see you, sir.
Good to be back.
All right, one thing is certain. Every time you've come on, you have told us that there are certain things that happen that are moving parts. The last time you said there'd be a secondary. The stock just had one of the biggest moves in the market. This time, the stock came in very hot to the quarter.
Yes.
Can you walk us through it? Because to me, the most important line of all this is you reaffirmed your view.
Yes, absolutely. What is important is we delivered on all the key metrics for last year and the fourth quarter as well. And we are confirming our long-term guidance as well. So we're all very excited, in particular about the integration of Frutarom.
Well, let's talk about that, because when I look at the Frutarom line, people were saying, I looked up the consensus was for $370 million. It came in at $359 million. So I think there could be some people say they just bought this thing, it's already slowing.
Yeah.
That's not the case, right?
No, actually, if you compare third quarter to fourth quarter of the Frutarom, for example, it's accelerating in sales. And we should not forget the fourth quarter was not completely a full quarter. We closed at the 4th of October. Right. So there are a couple of days missing as well. I don't want to exaggerate that, but that's the fact.
Well, let's go the other way. Tell us about what they have that you were so excited about.
Yeah. So first of all, the naturals. We all know that the trend for naturals is in the market for a while, and 75% of all their offerings are natural products. Secondly, they have a very big and large customer base. And this large customer base is particularly these faster-growing smaller companies. So we have now in our industry the largest and broadest customer base with 30,000 customers. And then on top of it, we are going into some of the adjacent areas where we have experimented over the last couple of years with active cosmetics already on our own, but now we are bringing some other adjacent areas like natural food protection, natural colors, or health products in as well, with all natural ingredients. And we believe that this can help us to accelerate our growth actually to 5 to 7%.
I think it's important. There's a generation of people who never really thought about natural ingredients. We just bought what was ever on the shelf.
Yep.
But this new generation of people, say between the age of 20 and 35, they look at the label.
Yeah.
They don't want to see a lot of ingredients.
Exactly. They want to have a clean label. They want to have natural ingredients. And then what we should not underestimate, there is basically a demand for plant-based protein, alternative proteins, which is a huge market for us because we have to make it palatable.
Everyone's laughing because I have vegetarian daughters, and this is what life is.
Yes.
And if I'm not sensitive to it, then I'm old-fashioned and a fuddy-duddy. It's what they want.
Okay.
All right, so how are we doing in flavors here? Because consensus was 417, came in at 401. Again, I mean, there's so many moving parts of currencies. There's always a lot of, maybe some one-time things. I want people to feel confident, stock down 8 or 10, that they should know that people are selling because they're uninformed.
Okay. No, what we have to say is we will deliver on our guidance. We did it last year. We believe that we can accelerate the growth on the top line, 5 to 7%, and around 10% EPS growth as well on the midterm, which I think is a good number.
Well, for consumer packaged goods, it's stronger than almost every one.
Yeah. And how are we doing it? We do it through areas where we have intrinsic higher growth in the marketplace. Right. That's number one. Number two, we believe that we have a lot of cross-selling opportunities into the new customer base with the already existing products. And we have an unmatched product pipeline right now. We have so many innovations in our pipeline, like new modulators, for example, where we can reduce sugar. We talked about this, for example.
Right. How about Greater Asia? India seem very strong.
Very, very strong. We're actually market leader in India. We are right now have a big capital investment there as well. We are building the most modern and state-of-the-art flavors and fragrance plant in India.
Fragrances remains very strong. It's just a universality, even in an era when people want selfies, you can't smell the fragrance. But people seem to just, it's just a great growth market. Estee Lauder's been telling me.
Yeah, it's a very good growth market on both sides, on the fragrances, but on the active cosmetics as well, particularly for everything which goes on the skin or on the hair. What we have had last year, a bit on the fragrance side, is that the raw material prices went through the roof, and we still expect some inflation. So we have to catch up with price. And if you have seen something in last year where we had a bit of a weakness, that was certainly the catch up with the raw materials in the fragrance business.
Balance sheet now totally great, even after a very big acquisition, right?
No, it's good. Balance sheet is good. We will pay back our debt. You know, it's a very high cash generative business, so we're very optimistic on that.
And is there any new flavor that people like? I know each time you've told me about something that, I mean, because we know, for instance, we are friends with the guys from McCormick, and people like spice. Is it natural spice? They want hot, because it doesn't put weight on.
Hot is right. And what we can do, for example, and we discussed it with one of our customers, to do on potato chips, different flavors on the different side of the chip. And we have
different.
Yeah.
Really? I was with the guy head of Frito-Lay last night. They just love that.
Yeah, because we have bought a company, a very small startup, and they can do 3D printing of flavors on any surface, basically.
That is brilliant. Well, Andreas, I think that people are getting an opportunity again, like you said, that they would on the secondary. That was one of the great opportunities of last year. This might be one for this year. That's Andreas Fipping. Guys, I know this company since it was one of my, actually, I worked very closely with them in the 1980s at Goldman. This is a real deal, 130-year-old company. He's the chairman and CEO of International Flavors and Fragrances. Dave Money's back after the break.